As we close out the year, precious metals have suddenly kicked into high gear. What's driving the surge? Can the momentum last? And which metals are most at risk or best positioned heading into the new year? I'm Johanna Bota, and joining me today to break it all down for us is Rhona O'Connell, Head of Market Analysis, EMEA and Asia at StoneX. Welcome, Rhona.
Thank you, Johanna. Lovely to be here, as always.
Well, it's been a very interesting year. It's been great for gold and silver, I would say, but all of a sudden, let's say in the past few weeks, all precious metals have gone into overdrive. Can you outline why?
Different reasons for different metals. Although platinum and palladium probably have more in common with each other than gold and silver do, for example. So let's deal with the PGMs first.
Okay.
The emission control catalysts are most important for platinum, 40-odd% of demand and over 80% of palladium demand. And if the deadlines for net zero that different governments have put in place were to be met on time, then palladium would be very badly hit over a 5-year time horizon, and further out. Platinum, not quite so much, but still not looking too clever. What's been happening over the last few months or so, and I think practically every PGM analyst was not surprised, is that different governments have been saying, oh, maybe we're not going to make it quite the way we thought we were. And that's largely down to consumer resistance and concerns about whether battery-driven vehicles have a decent range and what the infrastructure's looking like and can it support the new technology, and so on and so forth. The most recent activity in these markets, which has really spurred things just over the last few days, is the European Union changing, or the European Commission is proposing changes to the 2035 deadlines, not in terms of changing the date, but the percentage of vehicles coming off the production line which are allowed to have some emissions. And that's what's given platinum and palladium their most recent kick. In the slightly longer term, and this is where silver comes into the picture as well, there's been a certain amount of rotation out of gold as a safe haven because a lot of investors were perceiving the white metals as being undervalued against gold. And so they've been shifting from one side of the horizon to the other. Silver has taken off for exactly that reason. It's become self-fulfilling. It's it's cleared $65 an ounce, which means it's more than 115% up year to date. So is platinum, for that matter. And that's largely because people have come out of gold. It's also naturally more volatile than gold is because it's a thinner market. And generally speaking, even in normal times, let alone these febrile environments that we find ourselves in now, if gold moves in either direction by, let's say, X%, you should expect silver to move by twice X or 2.5 times X or thereabouts. And that's what's happened.
Exactly. I was just going to say that's exactly what silver did after gold went up. Silver shot through the roof.
Yes.
So can it carry on like this?
I hope not. We've had the Cinderella conversation before, haven't we, about silver coming to the party and then leaving very rapidly at midnight. It feels a little bit different this time because it's gone so far and hasn't yet shown any signs of correction. But I have a funny feeling there's going to be blood on the streets eventually. I've seen it happen so many times in the silver market, and it could easily happen with platinum and palladium as well because of those longer term fundamentals that we alluded to a little bit earlier. Silver is self-fulfilling at the moment. There's a lot of independent momentum, which of course is exacerbated by technical trading and momentum traders and so on and so forth. We are literally in uncharted territory. And there will come a point when things start to crumble, then I think you'll see a lot of people heading for the exit doors.
So if indeed there is more trouble ahead, which of the metals do you think will be the most vulnerable?
Silver.
Silver.
Yep.
Okay. And what about the most resilient?
Well, that's yellow.
Yes, it always is.
It always is. It's got the tried and trusted and well-tested reputation as a mitigator of risk, safe haven, and so on and so forth. It's also overshot. There's no disputing that. 60% in a year is an awful lot for a commodity currency, both that's got a reputation for lack of volatility, but there's a lot of geopolitical reasons driving that. And I don't just mean armed tension, but geopolitics with respect to independence or otherwise of the central bank in the United States, volatility in terms of policy shifts almost on a day-to-day basis. And I was at an LBMA seminar a couple of weeks ago, and there was one of the senior bankers for UBS and on the wealth management side gave a fascinating presentation, during the course of which he said that a good proportion of UBS high net worth individuals or family office clients, they're not necessarily looking at gold as an independent asset, but what they are saying is, get me out of the dollar and get me into something inanimate. And gold fits that bill. It's not the only one, of course, but it's prime and paramount. That's its job. So the question now is, it's been the question for much of this year, to be perfectly frank, is the gold market now too crowded? And are there people who are likely to take profits as when things start stalling? And in fact, it's been moving sideways for the last 7 or 8 weeks. It peaked in early October. So there is a distinct possibility that while some people have already rotated out of it, others may find, as the markets evolve over the course of 2026, we might have a small-scale reproduction of what we saw in 2013, with a lot of people coming out of gold and moving into equities or other assets because they perceive that risk levels have dropped. Now, the primary factor which might cause that is the fact that we've got the midterm elections in the States next year.
Yes, we do.
Almost invariably, in fact, I think every time we've had midterm elections, the party of which the incumbent president is a member loses seats. Now, whether the Republicans lose seats to the extent that there's a change in the balance of power in Congress is up for grabs. What I read suggests that it probably won't be, but it'll become even more closely defined. And the primary parameter which will probably dictate that course of action is the degree to which the administration becomes less volatile in terms of pronouncements on a day-to-day basis.
Highly unlikely, though.
You never know. He's softened his stance towards China. Venezuela's a different issue. Nvidia, again, that's all to do with China. The activity with respect to trying to chivvy up political activity in Europe is something to be watched closely. But I would have thought that his advisors will be warning him to tread carefully, because if they don't want to lose too many seats in Congress. And that means we need to have an element of stability imbued into the administration next year. Will it happen? Don't know. Jury's out. And talking of juries, the other important thing, again, which we've discussed before, is the outcome of the Supreme Court's decisions, or I should say, the Supreme Court's decisions. Not tariffs so much, Lisa Cook. Because that is the president trying to fire a sitting member of the board of the Federal Reserve, quote, for cause, when all that's happened is that there's been an allegation made against her. It's not been proven. So she's taken him to court. So the outcome of that hearing, in my view, is not so much the subsequent confirmation of the Federal Reserve Board, because if Stephen Millen stands down, he's the most established member of the board as we speak anyway. So the balance is not going to be tilted into a more dovish stance necessarily, just by virtue of that one decision. The important thing here, and it goes right to the core of the US Constitution, is the separation of powers between the judiciary, the legislative, and the executive.
Of course.
So if the Supreme Court finds in favour of Trump, that blurs that distinction, and that's bad news. And that would cause a run on the dollar almost certainly. So it's hard to quantify it, but we've probably got a $600 swing on the outcome in gold on the outcome of that court hearing. 300 up if it's in favour of Trump, 300 down as the risk premium from that particular element is taken out of the equation.
That is going to be a very exciting first couple of months of 2026 then.
It is.
A lot to keep our eyes on.
Indeed. Part of my job is to project price, obviously. I'm not supposed to make investments.
Please don't.
I'm not going to.
It's not going to pass compliance.
No, it's not. But the only way I can responsibly do my job at the moment is to lay out all those parameters and let people come to their own conclusions.
Yeah.
Because there's too many unknowns.
Well, you've done an excellent job, Rhona. Thank you so much
I
for
try.
all your insight, as always. And thank you for watching. For more financial content, don't forget to like and subscribe to our channel.